It's my pleasure to welcome you here to the Clark Howard Show. You know, our mission is to serve you with advice and information that empowers you so you make better financial decisions in your life. And know that we serve you around the clock at Clark.com and ClarkDeals.com. If you're not familiar with Clark Deals, it's where we post deals that you can trust. You know, so often with supposed deal sites, they're getting paid to post the items that are there. That's not our deal. We post things that we believe are gonna save you money, that are legit deals and are available to you around the clock with daily newsletters for both Clark.com and ClarkDeals.com. Today, I want to talk about getting a deal when you buy a home. Seriously. During a time that the mortgage market and the housing market both are not your friend, there's something you can do that will save you, on average, across the country, over $75,000 on buying a home. Do I have your attention? I bet I do. I'll fill you in a second. And later, you know, so many people ask me, what's the deal with Temu and Shein? I have a brother who loves ordering from Temu. How are you getting stuff so cheap from these two Chinese sellers? Although Shein claims to be from Singapore. I'm going to fill you in on that later. So saving an average of over $75,000 in the mortgage market, according to the New York Post, is really, really easy. It is. Because we may scroll endlessly through Trulia or Zillow or some other app or website looking to see what's for sale, what's for sale, what's for sale. Look at that one. We're going to go see that one. Oh, let's go look at this other one. Whatever it is when you're looking for a home. We obsess looking again and again and again and again and again. And then we catch the fish. We reel it in. We got that home we want to buy. And then it's like, oh, a mortgage. I got to pay for this thing. And often what will happen is the real estate agent will say, hey, talk to this lender we work with, or that lender we work with, a lender. And that's what most home buyers do. They go to one single lender. And the lender says, okay, so we need these 40 different items from you. Every tax return since you ever came alive. We need every x-ray ever done of your body over your lifetime. And on and on and on, as they ask for an amazing array of documents. And the mortgage process, truth be told, is an unusually complicated and unnecessarily difficult grind. So that's what most of us do. We go to one lender. But the New York Post reports that if you go to multiple lenders, the average person across the country saves the exact amount is really just an estimate, but I can give it. It is $76,000 and change. $410. $76,410. And in a number of states, people save over $100,000 shopping around for a mortgage. Not necessarily based on what housing prices are, although that's an indicator that would drive that up. It's based on how competitive the mortgage market might be in a particular area, metro area, or state. So it's possible that simply by changing one thing, calling one lender or contacting one lender and getting the quote from that one lender, to instead putting lenders in competition with each other. Because if you just go to one lender, they're going to quote you retail. Say, oh yeah, we're going to write this loan at blah, 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 and you're going to pay these many points, and you're going to have all these closing costs. But the second they know you have quotes from lender 2 and lender 3, suddenly that retail price sheet they're quoting to you from, they start saying, well, we could We could shave those points down to blah, 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 or no points or whatever. And we could do this with the closing costs. Maybe we could do this with the rate. And know this when you're shopping for mortgages. The interest rate is just one part of the puzzle. You shop the interest rate. If there's any points, what they are. Each point is 1% of the amount of money you're borrowing. And then what the closing costs are. And you chart the three things and you figure out which lender is the best. Because you're already having to pay so much right now to buy a home and pay for it with the loan. So at least make the difference you can make in what the cost of that home is going to be by what that loan is going to be.
And it's so easy to shop around online before you do anything. My credit union, where I got my incredibly low mortgage rate, they publish daily what the rates are and what you'd have to pay and all of that stuff. And then major banks, there's all sorts of...
Thank you for mentioning that. Okay, most banks have gotten out of the mortgage market. Credit unions are now the dominant player in the mortgage lending market. If you're not a member of a credit union, this and auto loans are the two areas where absolutely you want to be a credit union member. But not all credit unions are created equal, because during the cycle of low interest rates, the credit union you got your loan through was 1.75%?
875.
1.875%.
For 15 years.
At a time that a lot of other credit unions were quoting around 2.5%. Banks were quoting much higher. But now most banks have said, we're done, and they're out of the mortgage market. So it'll tend to be companies that specialize in mortgage lending and credit unions. That's pretty much the mortgage market now in the United States.
Yeah, I joined that credit union to get a mortgage because I was shopping around credit unions online looking at all their rates. So it's a good thing to do from the comfort of your home before you even call anybody.
And if you live in a major metro area, there will usually be 1 to 3 dozen different credit unions you can be a member of, and you can just go online. See, they're different than banks. They actually are owned by their members. So you go online, they'll say, hey, these are our rates, where a bank's going to try to play hide and seek with you. You're going to know right away. You take out a car loan, this is what it's going to be. You take out a mortgage loan, this is what it's going to be, based on what your credit score is.
All right, we'll go to questions. Stacy in North Carolina says, my daughter and her fiance will be getting married next spring. As a wedding gift, we would like to give them 1 or more sessions with someone to discuss finances such as budgeting, planning for a family, retirement, etc. I'm not sure who they should see for this or how to go about getting someone reputable. Knowing that financial concerns could be a big stressor for marriages, I want them to get off to a great start. And by the way, we are giving them a check for the wedding with a do what you want, but that's all you're getting.
I love it because you probably mentioned that because that's what we did with our oldest daughter.
That's what my parents did too.
Oh, did they?
Mm-hmm.
So we just gave them she and her fiance, a set amount of money, and they could spend as much or as little on their wedding as they wanted. They spent more, it came out of their pocket. They spent less, it stayed in their pocket. They spent very little money on the wedding and used the difference for the down payment on their home. So I love what you did. All right, so there are 2 organizations that I recommend for financial checkups that are not trying to play games with you. The Advice Only Network and Flat Fee Advisors. We have an explanation of them on our article, How to Find and Choose a Financial Advisor. But these organizations are people who ultimately they'd love if you come to them regularly for advice, but you can just pay them like you'd pay an accountant or a lawyer for a session or sessions to get financial guidance and advice moving forward. And you don't have to worry that somebody's going to be trying to sell you something like anybody who pretends to be a financial person from a bank, from a big brokerage, or from an insurance company. I want you to get advice that you can trust. It may not be advice that you agree with, but it'll be advice you can trust.
Julia in Ohio says, hello, Clark and team. My 13-year-old son might just be the luckiest person I know.
Wow.
He loves to metal detect and recently found a diamond under the baseball stand bleachers at our local park. Note, we have permission to metal detect in the park. It is attached to a small setting that appears to have broken off from a ring. After performing various tests to determine if it's a real diamond, we were pretty certain that it is. We brought it to our local police station with the thought that we'd get to keep it after 30 days if the owner did not show up, but they said they would keep it indefinitely. I cannot find any black and white information on Ohio law for this matter. Can you help bring me some clarity?
Okay, shame on the police department that you turned it into, because you're giving a 13-year-old the worst possible lesson you could ever give to the police. Say, yeah, well, we're just going to keep it forever, and we're really telling you it really doesn't pay to be honest. I mean, that's ridiculous. I would contact the police chief of that department, or in the city or county you live in, contact the city council member for your district or the county commissioner for your district. Tell them what's going on, because that is just flat out wrong teaching. It would be completely reasonable for the police department to hold it for a while. If the rightful owner somehow comes along, give it to them. But after a period of time, that should go back to your son, and the value of it should be your son's and your son's alone, because it is flat out wrong what that police department's doing. Not even remotely wrong. Totally wrong.
And I would, if I found something like that, just FYI, in case the police do keep it too, I would put it on Nextdoor and just say a jewelry item found at this park. Let me know, describe it if you've lost something there. Nextdoor, social media, sometimes you can find owners that way, somebody who might have lost it. John in Texas says, I'm considering whether or not I should purchase an umbrella insurance policy. Your website says if your assets are more valuable than your current liability coverage limits, you might want to consider an umbrella insurance policy. Does this include retirement savings? My wife and I have about $1.5 million saved in 401ks, 403bs, traditional and Roth IRAs. Are these assets at risk?
John, I love your question. So in most states, and I don't know, no way I could know specifically in Texas, although you could probably find this online without too much effort, money in a 401k, an employer-based plan, in almost all states is a protected asset that is not at risk if you were to lose a lawsuit that ends up with a big liability judgment against you that could go beyond what you have in liability coverage. And generally around the country, it's the opposite with IRAs. IRAs are considered to be an asset that can be grabbed in most states in the event there's a judgment entered against you. So in the worst scenario, all your retirement assets in just a small number of states could be at risk. In the typical scenario, the money in the traditional and Roth IRA could be at risk. So this is why one of the reasons I like for you to take all your assets and use those as the basis to determine if it would be good for you to have an umbrella policy. The good news is what an umbrella policy is, if you're not aware of it, it sits above whatever liability coverage you have. If you own a home, on your homeowner's insurance, on your autos, the liability coverage with it, and it resides above it to deal with the unlikely event, but catastrophic one if it happens, that you get sued, suffer a major judgment. The liability policy, the excess liability policy known as an umbrella, sits above all your other coverage, which is why it's called an umbrella. And these are crazy affordable for what you get. The first million's more expensive, usually a couple hundred a year. Each additional million in coverage is cheaper. And so having an umbrella policy is a lawyer's full employment act, because it gives lawyers a bigger, fatter target to go after because you have all this insurance. But it also is really good to protect you moving forward in the unlikely but unfortunate event that you did something wrong, or a court decides you did something wrong and comes after you big time, coming after your wallet. So I love umbrellas, and I recommend them. And by the way, speaking of umbrellas, They're back in stock at $1.25 Tree. I just got a bunch of umbrellas for $1.25. How does this have anything to do with this? Because people have been lamenting that Dollar Tree stopped selling umbrellas, and I was able to get them. And why would I buy a $1.25 umbrella? Because every time inevitably I go somewhere and it's raining and I have an umbrella, and I'll go somewhere and then it's not raining when I leave, I forget my umbrella, lose it, leave it, lose it. And so having a $1.25 umbrella is not that well made, but one that if I lose it, at least somebody else gets the benefit of it, has been great. Have you ever heard me do something as crazy as a spin out of something as I just did?
No, it makes total sense. Yeah.
Been meaning to talk about the $1.25 Tree umbrellas.
I mean, those umbrellas really are not the best, as you said. I mean,
if it's raining and you open that thing up and it keeps you dry.
I've got one good one. I keep it in my car. Love it. Works great. Got it at Costco, actually.
So last time I was in New York, I went out with one of my legacy $1.25 Tree umbrellas. It was an old $1 one. I opened the thing up, and in New York, if you've ever been there, there's a tunnel effect with the buildings, and the wind
it's useless.
Just takes that umbrella and snaps it in the first 15 seconds.
Right. It's cheap. Yeah, it doesn't work very well.
Well, I was able kind of to bend it back and use it for at least the rest of that day. Oh, well.
I'd rather have one good $15 umbrella than 15 $1 ones.
But you're not like me. You're not going to leave it the first time you go out with it.
Yeah.
But I am really flaky. Speaking of cheap, it's perfect transition.
Yeah.
Temu and Shein, we're going to talk about them straight ahead. If you've been a long-time listener to our podcast, you know that a couple of years ago, I ordered a bunch of stuff from Temu to see what it was like. And the stuff would vary in quality. If you've never been on Temu, and people that are into clothing, Shein's more than clothing now, but Shein, these two fast-growing sellers are becoming huge forces in retail in the United States. And they are selling goods and clothing at prices that are crazy, crazy low. And they've been doing this by taking, particularly in the case of Temu, taking manufactured goods from small factories in mostly villages in China and direct shipping them to the United States. And so you don't get stuff. It's not like Walmart Plus or Amazon Prime. You're not getting stuff in a day or two or three. You're getting stuff that sometimes takes weeks to get. But they've been shipping under a U.S. allowed program that allows for small value purchases to be shipped in duty-free. And there's been some back and forth about this because there's been some fraud involved where they're lying about the value of stuff that's coming in allegedly. Reuters wrote a report about how Customs is cracking down on some of this. But the reality is it's brutal for U.S. retailing. Amazon in particular is terrified, apparently, of what Temu is doing to the perception of what prices should be on goods. I stopped ordering from Temu because there were a number of complaints from people on Clark Stinks that I really needed to look at where the goods were coming from. Were these factories exploiting small children? Were they unsafe? Were they using prison labor and all that? And the information was so unclear if that was really going on or not that I figured the best thing for me to do is stop ordering. But I have a brother who loves to order from Temu and is always bragging about this he got for this little and that he got for that little and the other. But again, the quality of the items is really variable. Shein was really worried about the backlash against the Chinese in the United States. moved their headquarters to Singapore, but still the goods primarily are coming from China. Now, then the other issue with Shein is that the goods are not necessarily of the highest quality. They're fast fashion that is ultra cheaply designed and made allegedly. But then there are people who, if you look at influencers on TikTok, who repeatedly show off the stuff they got on Shein at really, really cheap prices. So my attitude about this, you buying from Temu or Shein, just know the backstory. If the backstory is fine with you, go ahead and buy from them. If the backstory worries you, freaks you out, whatever, don't buy from them. On the clothing front for women, the used clothing market in the U.S. is thriving. And my wife buys and wears almost exclusively used clothing now. And that is the ultimate form of recycling. You're buying things really inexpensively. And my wife could do a fashion show with the stuff that she buys used in the used clothing market. And you could too, because Americans dispose of clothing, not men, but women, so quickly that it's almost like throwaways to them. That it means you can buy clothing secondhand so very affordably. Do you buy used clothing? How do you get your clothes?
Sometimes if I see something, like my friend had a jacket that I loved, and I found it on eBay, and I bought it there. But usually I don't buy a ton of clothing, but when I do, I'm a big Marshalls gal, and I'll buy stuff at Target too. So that's usually where I land, to be honest. But I've really slowed down. Like I just have certain things I like to wear, and I wear them over and over and over again. I don't, necessarily keep up with any trends or anything.
So when Lane and I travel, and you look at pictures from our trip, you can't tell what day of the trip it is from what I'm wearing. Because I wear the Clarkiform. I look the same in what I wear pretty much every day of my life, unless it's really cold, and then I'll pull out the long pants. But that's how you tell, is every day she's in some kind of beautiful outfit that she assembled from used clothing.
Yeah. Does she do a lot of consignment store shopping? Is that?
She does.
Yeah.
She does.
Because she wears nice clothes.
She also recycles. So she'll have something that she thought she'd like it. She doesn't. She immediately puts it up for consignment. Yeah. And she's got this whole hierarchy. Like, these items go to this store because they like that brand of clothing, or they like that tier of clothing, and then she goes to this one, then she goes to this one. And it's an amazing thing that she's able to do. And so nothing is having to be manufactured for her to wear, because she's buying things that somebody already bought at least once.
Yeah, ThredUp is a good thing too. There's some of these online services. You can send in your clothes, and then you get credits to buy other used clothes. And if you're into designer things, that's a great way to get them.
That's what I'm really into. I'm really into Members Mark and Kirkland Signature.
Yep, those are your brand names. All right, we'll go to questions now. This one's from Scott in Wisconsin. A couple of months ago, my wife requested that I order our child's birthday cake from Walmart. I'm not a fan of Walmart and refuse to shop there, but as you say, happy wife, happy life. Ever since then, I get random text messages from Walmart about orders being shipped that I have not placed. I check my Walmart account and my credit cards, and they both show neither has been used fraudulently. I finally called Walmart customer service, and they confirmed that no orders were placed using my account and no other account is using my phone number. To be cautious, they forwarded everything to their fraud department. Is there anything else I could be overlooking or I should be worried about? I do have my credit frozen.
So, Scott, likely it was a coincidence that the birthday cake came from Walmart, because the scam texts that people are getting, what are called the pretexts, are coming from people who are trying to scam you by having you respond, oh, no, I didn't order that. Well, let's check this. And they ask you for personal information. to try to engage in identity theft or directly being able to steal your money out of your bank account or whatever else. It's more often that you're going to get the scam ones from Amazon, but they're not really from Amazon. But Amazon and Walmart, because they're the two largest retailers in the world, are the two that people are most often getting these pretexts. And so it's something that you just know to delete them since you're not a Walmart customer. If some weird charge showed up on your credit card, you would just dispute it like any other fraudulent charge. And they're not showing up there, so you can rest easy. This is just a typical scam and almost certainly a coincidence that crossed with the birthday cake. And I hope, even though you hate Walmart, that the cake from Walmart was really tasty and beautiful.
Absolutely. Okay, Callie in Georgia says, my husband and I are in the process of getting a new car for our family. We have a toddler with another baby on the way.
Congratulations.
Congrats. We've decided we would like a van for all practical purposes. Out of the limited options on the market, the Toyota has the best safety ratings. One caveat is it only comes as a hybrid. While the gas-saving aspect is great, the research we have found regarding the long-term effects and safety of the battery is minimal, vague, and conflicting. Are the hybrid vehicles safe for our family and kids long-term? While the Toyota Sienna is rated the safest from a collision perspective, does this outweigh the risk of unknown effects of a hybrid? Am I crazy for thinking the hybrid battery could even be a health risk?
You're not crazy at all, because you never know where environmental risks come from. The hybrid came into being from Toyota in 1997 was the first hybrid. So we're talking about, we've got, 27 years of experience with hybrids. There's no known medical research that the hybrid battery pack has caused health problems to anyone. Relatively speaking, the battery used in a hybrid of any brand is so small in capacity that it's a whole different scale than if you were buying an electric vehicle. The Sienna gets phenomenal fuel economy, averaging not quite double the fuel economy of their two arch rivals in the van market, but just incredible fuel economy versus the Honda Odyssey and the Kia Carnival. Mm-hmm. Consumer Reports says the Kia Carnival is the best of the three vans. And it's one I don't know anything about, but I can tell you Consumer Reports says it is the best, but its fuel economy will be really disappointing compared to the Sienna. All three of these vans, though, have really stood the test of time as reliable family haulers.
TJ in South Carolina says, recently I visited a car dealer to test drive a few cars and decide what model I liked best. Instantly, the GM was there in my face. Oh, I hate it. He wanted me to sign a form to drive the car off the lot. That's in quotes. I told the GM I was already working with my bank and preferred not to fill out a credit app. He said it wasn't one, but it allowed him to do a soft pull, no hit on my credit. I knew my credit was fine, 780, and again said no, please. That night, I had an alert of 4 hard pulls on my credit.
Wait, I thought you said no.
Yeah, he said, please don't pull the credit, but I think he must have.
Oh, they lied. Okay.
My bank said I could call the dealer and ask them to retract their inquiry, so I did. 2 weeks later, I got a legal letter of credit denial by mail from the dealer. I feel it was unnecessary and that they're trying to harm my credit at this point because I didn't buy with them. Can this denial be removed from my record? I feel the dealer should be marked for using fraud tactics. What would you do in this case?
All right, TJ, know this. When you go to a car dealer, they're all going to do this junk with pressuring you to let them pull your credit.
Maybe not all.
Okay, most do this. It is I'll call it semi-standard operating procedure in car dealers. The only thing I ever want you to do at a dealer is what you went there to do, a test drive to see if you wanted that particular make and model. I want car purchases to be done online. I do not want you doing business with the dealer in person except to take delivery. Now, dealers are routinely wanting your social supposedly to comply with federal money laundering requirements, and that's not supposed to be done as a procedure of pulling your credit with a hard inquiry. Obviously, this general manager of the dealership lied. Again, sadly, a common event at the dealer. Very disturbing to me. But when you are going to, I don't know if you've already bought the new vehicle you were going to get or new to you used vehicle, please look through our guides about how to buy one the right way so that you don't put yourself in an inferior position at the dealer. And for anyone else going for a test drive, do not, when you are going for a test drive, under any circumstances, absolutely do not give the last four of your Social Security number if they just ask for that. Don't give your Social Security number at all. Now, as far as that inquiry, your credit score, 780, the temporary hit to your credit should be around 10 to 12 points. Your credit is so solid, this will not be a major concern. But it is despicable as a practice. And if you were, as an example, you were applying for a mortgage in the next few months, that inquiry alone could be a factor that harms you on rate for a mortgage. For general everyday things, it will not harm you significantly, and the initial effect on your score will fade pretty quickly. But just know, as Christa said, I talk in broad statements. It is incorrect for me to say that all car dealers do this, but it is a common industry practice. Just say no. And one thing not to say no to, the fact that we offer you the ability to get one-on-one free advice and information when you need it from our Team Clark Consumer Action Center, 30 hours a week. So I guess that's not exactly when you need it. It's 30 of 168 hours. But it's a free service we've offered since 1993, where you can get one-on-one advice from us. To know how to do it, to reach us, go to clark.com/CAC and get that advice and info you need to empower yourself. Know what we're about. You learning ways to save more, spend less, and avoid getting ripped off. And we'll see you tomorrow.